Good morning, everyone. It is Thursday, August 5th, and this is Nadex Morning Analysis, where we look at hotspots in the markets for the day. Uh, my name is Todd Rich. I'm with Nadex. With me from Keep Trading Simple is Brian Caprice. Before we jump over to looking at some hotspots in the markets today, we need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So, what are we going to be talking about today for hotspots in the markets? Well, I think the first thing we're going to end up talking about, and I've got a couple of charts up here for you to see it, is yesterday we saw gold spike. We saw the US dollar starting to get crushed, and then it just turned around. Now I pulled up the euro US dollar chart because the euro's in the first position, dollar's in the second position, so the dollar this is dollar weakness. But if you look at this chart of what happened in the euro US dollar, and this is gold right next to it, you're seeing these things are tracking each other nearly identically. So gold, wild ride up, came all the way back down. Been a bit of volatility. What is this? This is summer trading. No real reason for the dollar and gold to be making. And here, I'm actually going to go ahead and close the euro US dollar so you can see that I am talking indeed about gold on this chart underneath. But we saw the same thing happen in all the other dollar pairs. If the dollar was in the first position, the chart was exactly the opposite, the dollar driving lower. So this is summer trading. So Brian and I are going to talk a little bit about summer trading when things are kind of thin and volatility can show up and prices can be a little erratic just because there's fewer eyeballs in the markets. Then we'll also take a quick look at what's going on across the indices, particularly given that we just did have some initial jobless claims and continuous jobless claims numbers. So, Brian, I'm going to flip it over to you, and we could talk about
Sure.
gold and the dollar, and then we could take a look at some of these indices in light of some of the economic news that just came out.
Yeah, I mean, you just showed gold, and did you let everybody else know what the second one was? I don't
Yeah,
think you
I
mentioned
said
it.
it was the euro US
Oh,
dollar.
okay. Yep. Sorry, guys. Out of it last night. Rough injury. Shoulder doesn't move right now. So I'm like, what? Wait, what's my name?
Wait. Let me get this straight. Your brain's not firing on all
It's
pistons because
not.
you're a shoulder guy.
No, no. Unfortunately, it was like one of those, like the adrenaline disappeared, and then it was like, wait, I have to sleep on this shoulder. I was like, oh god.
Yeah, there'll be
Um,
no sleep.
yeah. So I mean, Todd had showed the euro dollar, and again, this is obviously the gold chart. We were sitting right in this level right here, and we talked about how it just needed a little bit farther to go up to that 1830 level, but that we'd like, the 1830 level. And I mentioned that typically when you see this setting up on multiple time frames, they tend to present good trades. Now, I'm going to say it again. I didn't expect this fast of a move from that. We did draw the line saying we expected it to kind of bounce here and kind of come back to the downside much, much faster than I thought. But at the end of the day, I mean, the reason I'm showing you this is kind of a learning experience. You may not be a gold trader. You may not be a currencies trader. I mean, you may not be, even a futures trader. You could be one or each of those individual parts. But, basically nothing has really changed in 24 hours. But yet there was massive movement up $15 and then almost immediately retracing back again. If you look at this chart, I can literally take this though and flip this. And this is why it's important to understand different asset classes. Because again, maybe you're not a gold trader. Maybe you don't feel comfortable trading gold. But here's the dollar yen, right? You say, oh, wait a second. This went down. Yeah, but it's the exact same trade, right? So when you look at the dollar index, here's the dollar index, which again, we're not trading. What did it do? It went down to a level where we had basing and testing, right? Here's where we were standing at 9 o'clock right here. And I said, we got a little bit more of a ways to go, but I like that because it's also lining up. Well, here's the dollar yen. Look at this chart, right?
Yep.
And then look at this chart. And it's the exact same chart. We mentioned
Identical.
that we had just a little bit farther to go, the 108.77 72 range, and it looks exactly the same. So this is four different charts. Obviously, two of them go up and two of them go down based off of where the dollar is. But you had the dollar, the euro dollar, the pound dollar, and gold all did the exact same thing. They needed a little bit farther to go for an area of a turnaround in the USD. And it doesn't matter where you took it, they were all great setups. They were all very, very fast. Again, I did not expect these to move that fast. This is quite a lot in a very short period of time. And it really wasn't a whole lot of catalyst, but like Todd mentioned, it's probably more due with, summertime trading. So those are some interesting positions there. I wouldn't say that any of them. I mean, the news we just had came in basically as expected, so it's not really necessarily a big driver for any of those pairs. But I will say, I mean, I think right now we always talk about hotspots. I think NQ is one of the hotspots. Everything is a little bit green right now, but we are approaching a level. And again, yesterday we sliced in and ended up grabbing this zone, coming to full completion and coming back down and grabbing that 15,000 mark. But today we're up at that 15,105 lump number that we mentioned. Now it has hit that. It hit this one about 2 o'clock yesterday, dropped, and then got pretty close again later in the evening, and we've hit it. I would say today I'm a bit more of a bearish mindset on this one, just because we're hitting that zone. Now we have hit it a few times, so I would be a little bit more cautious with it at this point. Remember, we like these first touches here, and that was a decent pullback. But we got to be a little bit cautious now, right? Because every time we hit it, there's less and less and less sellers in that area. If we end up turning and flipping up to the top side, and we end up trying to break through, remember the next two major targets that we're looking for are 15,150 and 15,200. Based off the news this morning, and as Todd mentioned, the unemployment claims came in basically exactly as expected, and then there's nothing else for today. That's not necessarily bad because the market had prepared for that one. I will say we just got 7 o'clock this morning. Bailey did make a comment that if inflation persists, the BOE is prepared to act. So a little bit more of a hawkish statement coming out of them. Now, again, we know inflation is here. It's kind of another one of the central banks saying that, hey, inflation's not there. Remember, inflation is kind of a no-no for the overall stock indices. But the NQ is kind of set up, and I would say probably more bearish from this level. And then I just wanted to review from yesterday that trade. Remember, I had all kinds of stuff thrown on here. Yeah, the Russell trade. And I talked about this with my group. I typically do a session with my group after this one. And I just wanted to point out, I've removed everything to make it clean again so you guys can see it. If you didn't attend yesterday, I think you can still watch it. We have the Education Summit next Tuesday. I'm going to talk about using Fibonacci. I feel like a lot of new traders that come in, particularly that have watched us here and then come across to message me and things, they don't necessarily have great strategies that they're trading. It's something like really like almost too basic that it's just not beneficial for them. A lot of people like Fibonacci. What I did is I drew Fibonacci on this yesterday. It was almost an absolute perfect retracement in, as well as the extension came exactly back to where we drew it yesterday. I removed those now, but again, I wanted to leave the risk of reward kind of boxes on there. And again, if you don't have a good strategy that you're doing again and again and again and again and again, you're probably not doing very well in the markets. This was an easy one to set up, and again, I just wanted to show you guys the completion. Like I said, came all the way back, hit a 50% retracement, went all the way down to its original profit target for its 1 to 3. And again, I drew two of them here. Basically, one of the things that I mentioned yesterday that I feel that it's also important that you guys all know is depending on what your risk level is, there's something also called position sizing. This was an example that if you use just kind of standard Fibonacci, what happened was you needed to take this much level of risk in there to create a 1 to 3 risk to reward ratio based trade. And that's where a lot of people will put their stop loss at. Well, there was also a way, kind of in the way that we trade, that you could have taken a much, much smaller level of risk. And you can see that it doesn't require as much of a move. But what this does is when you have smaller risk, you can have a larger position size. At the end of the day, if you have a rule in your kind of trading that says, I'm going to risk X number of dollars on every single trade, which you should, having to take a larger level of risk, you have to trade a smaller position size. So just for an example here, let's say that this is 2 times as big. Say you're risking, and again, I'm just throwing these out here for easy math. If half of this is this little one here is $5 worth of risk, right? But you can only risk $10 per trade. You could only trade one contract over here. But yet when you took this lower level of defined risk, you could trade 2 contracts. You may say, well, what does that? Okay, I got it. Yeah, it's half the size. Sure. Well, the difference is over here, right? I had to go much, much farther in price, which lowers my level of probabilities. Where over here, I didn't have to go as far, but I still had the same risk to reward based trade. But now I have 2 contracts versus having just the 1 contract over there. So every time it moves, it's making twice as much money to the downside. And again, could you have held it longer? Sure, you absolutely could have. But
You
at the end of
didn't
the day,
need
the
to,
risk
right?
level is exactly the same in these two, but you have 2 times as many contracts on the size. And again, if you were using a binary contract and this is all the way down here past your strikes, did you have to close it out here? No. Could you have taken it all the way down? Yeah. I mean, think about this. In this one over here with a single contract, if it closed in the money, whatever it cost you to get in, minus that by 100, you got it, right? Over here,
Yep.
we know, say, and again, the same thing. Say it cost you 10 to get in, you made $90. Awesome. Over here, it only cost me 5, right? It's still closed on the other side, which means I made $95 per contract. And again, do the
You
math. It's
did two
100.
of them.
It's 190. Yeah, so you made
Yeah.
$90 versus 190 on this side with a lower level of risk and the same
Great
risk
lesson.
percentage.
Yeah.
So
Great lesson.
it's one of those things, guys. You got to have first. You got to have the strategy, then you have to have the money management side of it, and then you actually, you add into the position sizing. But it's very, very simple. And again, if you don't have a strategy, this was a very, very easy draw using fibs to, I don't even have it up here right now. The fib retracement, bringing these in, it was very easy to figure out where to, enter these trades. And again, if you guys don't know this strategy or you would like to learn more about it, come on Tuesday. I'm going to show this to you guys on Tuesday about how you could have got into this trade with the Russell. And it's not
Excellent.
just the Russell; it works with everything. So.
Yep. Excellent. Excellent. No, and today, given that it's a quieter, slower day, I love doing a little bit of education on some of these too,
Mm.
because there's not always a lot of news moving the markets for us to discuss, and so we can certainly take the opportunity to one talk about what is trading, but and where we're seeing some volatility, but also do a little bit of education while we're at it. Definitely makes good use of the time. All right, with that. Any questions for Nadex, please email us, customer service at nadex.com. Any questions for Brian, support at keeptradingsimple.com. I know, quick little recap of whoop, I meant to do that. Here, I'll actually go back just so you can see them. Customer service at nadex.com and support at keeptradingsimple.com. And just a quick little recap of what we talked about today. It's thin summer market trading, and we saw some incredible volatility in gold as well as the dollar, the U.S. dollar. And we took a look. I mean, and those charts all looking nearly identical when the dollar's in the second position, and exactly the inverse when the dollar's in the first position. And then with the economic numbers that came out this morning, slightly encouraging numbers. Initial jobless claims right in line, continuing jobless claims dropped, and we're seeing equities trying to open slightly in the green. Uh, and we'll see where traders want to take it in a half hour when the U.S. traders get online and the equities markets are open. With that, Brian and I will catch you again tomorrow morning. Thank you so much, and good luck in the
Non-farm
markets,
tomorrow.
everyone.
Don't forget non-farm payroll tomorrow at 8:30 in the morning. So that'll be a big one.
Oh yeah, you're right. So that's right after we.
No, 8:30. 8:30
Oh,
tomorrow
8:30,
morning.
right
So it's
before we
right
go
before we
live.
get on, guys, and it's
Right before
expected to
we
be
go
an
live.
absolutely monstrous number of 870,000 jobs. Again, make sure you guys are looking at that one at 8 o'clock in the morning. We talked about the news trading yesterday of things. It's the same thing. The same thing we did yesterday with oil. It would be the exact same thing tomorrow with non-farm payroll, particularly in things like the euro dollar or even the indices tomorrow. So
Yep.
that's 8:30 a.m. in the morning.
Thank you for that one. And I did just drop in the economic calendar over on Daily FX. So if you want to track those to follow that. All right. Good luck in the markets, everyone. We'll catch you again tomorrow morning.